Welcome to our accounting buddies out there. Yes, you with me, Ashraf Patel, on your favorite learning program, Matrix Uploaded. Remember, we started dealing with inventories already, haven't we? So now, make sure you know exactly what I'm doing. Let's look at the trading stock account once again. If you're looking at your trading stock account, remember guys that your trading stock is an asset account and therefore it has a debit balance. That's the most important thing to remember about trading stock. Now, all the activities that you've been doing, when it came to the end of your financial year, you were given a balance for your trading stock. In other words, what are we saying? We were using what is called the specific identification method. What do we mean by this? By this we mean we identified each article and we took the cost price of that article and it was therefore recorded. So the system that we were using, remember the two stock systems that we have? The two stock systems are periodic stock and perpetual stock. That does not change. What we are now going to be introducing is stock valuation. In other words, the system doesn't change, but the method of valuation of stock will change. And which method have you been using right up to now? You've been using, as I said earlier, the specific identification method. But before we continue, let us look at the trading stock account and see if we can refresh our memories to identify certain bits of information that are critical to our understanding of the ledger account. Starting with this that you see on the debit side, you see a figure is missing and a contra. That means your folio reference needs to be indicated. Okay, so if we are looking at the cost of sales on the debit side of my trading stock account, what is it indicating to me? It is indicating to me that stock has come back into the business. Right, so obviously your folio reference would be, think of this one here, this would be your debtors allowances journal. That's right, stock is being returned and as a result, your trading stock account is increasing in value. Obviously, you would indicate the amount and remember that amount would always be at cost price because when you work in your trading stock account, you are working at cost price. Okay, let's go to the credit side of this account. In other words, this one here tells me that it's the cash receipts journal that I'm working with, that one there. Right? Now the detail for it. Why would I enter from my cash receipts journal on the credit side of my trading stock account? Certainly, this detail here would be my cost of sales. Remember, cost of sales. But now you find me doing something very strange. You find me abbreviating. Remember, Ashraf has a license to do that. You will never ever abbreviate, but you will write it out in full. Cost of sales. Okay. Then you find another one that comes from the creditors allowances journal. Trading stock is decreasing in value. So the question that you need to ask yourself is, why is that? Certainly, you are reducing the value of your trading stock. In other words, you are returning trading stock to your suppliers. Therefore, this entry here would come from where? Obviously, your creditors control. Why? Because you are returning trading stock to your suppliers and as such, your trading stock account is decreasing in value. Remember, the magic of a T account, you would add up the debit side, you would add up the credit side, right? You would find the greater total Obviously, being an asset account, the trading stock, this side will be greater. You then subtract this side, taking all the figures into consideration, making sure that these two totals are the same. We often refer to them as the train line totals. And then you would balance your account, and this balance here is your closing balance, and that's the figure that you would then say that that is the balance, the value of my trading stock on hand. Got that, guys? Please make sure that you understand a trading stock account. Obviously, another important feature, and this you should have identified for yourselves a long time ago, that by using this type of trading stock account, we are actually saying we're using the perpetual inventory system. So now, when a business is dealing with large items, for example, cars, furniture, etc., it's very easy to ascertain the cost price. Not true. Certainly. Why? You can see that a vehicle, you can identify the vehicle, and you can ascertain the cost price of that vehicle. The same would go for large appliances. Because they are large appliances, you can easily identify them and easily ascertain the cost price of those items. Now, when a stock consists of several similar items, smaller items, it becomes very difficult to ascertain the cost of that item. An example of this would be golf balls. Think about it. Once you are dealing with golf balls, it becomes very difficult to ascertain the cost price of each of those golf balls. So therefore, remember, what is important to us up to now, we have shown you exactly that the method that you have been using to date is what we call the specific identification method.